Right. Hi. Well, then we've reached the end of this course. This is the final video in this course on currency trading, beginner's guide to currency trading, and I hope you found it useful. It's turned out to be a little bit longer than I expected, a lot more content, but I think rather more than less. And I hope you've managed to pick up the essence and the substance of what currency trading is all about, Forex trading, and how to set up your charts and your trading platform and read candles, put on indicators, lines, horizontal lines, fibs, and all that sort of thing, how to take trades, how to open up all the software that you need. And I hope it's been useful. I really do. And I'm pretty sure that if you follow the basic guidelines in what I've taught through this course, it'll go a long way to helping you become a successful and consistent currency trader. And hopefully, in time, perhaps sooner rather than later, this will become something that you can do full time, perhaps as your career, or if maybe you're retired or you work from home or you're a mother from home, you can do this whilst you're doing other things around the house or in the coffee shop. But I've got my final thoughts here as we're closing out, and just a couple of things that I wanted to let you in on, and which are important to understand. And these are just sort of, they're not really afterthoughts, but they're important aspects which I haven't covered thus far in the course. So let's just start at the top here, the final thoughts. And the first thing we have is monthly targets. People often ask me and say, well, what is it that we should be aiming for? We've seen what we need to aim for per trade. We've talked about risk and reward and stop losses and targets per trade. But we haven't talked about overall goals per, and it's easier to do it per month. You could do it per year if you wanted to. Per day is really a bit short because some days will be losing days, some will be winning days. Some won't be so good, some will be really good, like the trade that we had a look at in one of the last lessons. But monthly targets, this is just my advice. My experience has taught me that this is a reasonable way to approach things. You should be looking at around about 200 pips. Now, we all know what a pip is now, but you should be aiming for 200 pips or somewhere between 5 to 10% growth on your account. And people often also say to me, whether once you've reached those targets, could be early in the month, it could be in the first week, or by the second week, you may have already reached 200 pips or 5 to 10% of your account size in terms of growth. Do you stop trading for the month, or do you just carry on as normal throughout the month? Now, there are two schools of thought on this. Some people think, well, once you've reached the target, you switch everything off, you take a break, you go and do other things, and you come back the following month. That's one way of looking at it, and it's what I tend towards myself. Or you could carry on trading. Once you've reached your target, let's say it's after the second week of the month, you might just want to carry on if you enjoy it so much, or if you think that there may be better opportunities later on in the month as well, you could carry on trading throughout the month. The risk of that, of course, is that once you've made your target and you carry on trading, you could lose some or all of the profits that you've already made. It's also very important to have downtime from the markets. As fun and exciting as it all seems, it is also quite tiring and demanding mentally and emotionally. And you want to be able to have periods when you can switch off, switch the computer down and go away for a few days, or go on holiday, or just relax at home watching sport or the latest Netflix series or whatever it is. But you want to be able to do that to make sure that you remain fresh and alert and ready for the thrust and the cut of the markets. So my advice, aim for around about 200 pips. It could be 300, could be slightly less, but roughly that amount of pips, or 5 to 10% of your account. In other words, as you saw in my account this month, I made about 10%, 11%. So on $50,000, we got up to, after the trade and in the last market move, up to about 55,500. So 11.5%. Well, that was last month. That was in January. In February, now we start again. But yeah, so that's a good target, and it's a good time to take a break. Like I said, the other option is for you just to carry on trading throughout the month. The risk of that is that you might lose some of the profits that you've made, and also the risk is of burning out, and you really don't want that in the currency markets. You want to be free of fear and greed. You want to have a fresh mind. You want to be able to have some leisure time and approach the markets again in the following month with renewed vigor and freshness and excitement about trading. This doesn't want to become a dull, arduous routine that drags you down. You want this to remain, as I said, fresh and exciting and dynamic. And that's the idea of stopping once you've reached a certain goal. So those are my thoughts on that. Everyone feels slightly differently about it. It's up to you, but that's what I would advise. Now, the next thing we haven't talked about, and I've mentioned it in passing as we've gone through the parts of this course, and that is trading times. Now, the market's divided into three segments, although they do overlap a little bit, but 3 periods of the day when these markets are active. Mainly it's based on the stock exchange markets opening and closing in these areas. First of all, we've got New York, NY, New York City, Wall Street, New York Stock Exchange opens at 9 o'clock in the morning, New York time, and goes through until around about 5, I think it is, in the afternoon. But there's and you can translate this whilst we're here. Let me just rewind a little bit. If you go to, there's a website called timeanddate.com. Time and date, all one word, timeanddate.com. And you can go to that website and you can put in any time zone that you happen to be living in and ask for the equivalent time in any of these time zones here. So go and have a look at that. For example, for me, we're a number of hours ahead of, I'm in the sort of European time zone. We're several hours ahead, 6 or 7 hours ahead of, depending on daylight saving and that sort of thing, of New York. So by the time New York opens for trading, it's late into the afternoon, my time. But this is the most important period. And you can go and look at timeanddate.com, find out what time it is in your time zone when New York is open. This is the most important trading period. When I say important, the market moves the most. There are the most important announcements taking place, news announcements, which we'll cover shortly. And also the markets tend to be more fluid, much bigger volumes, more stable, there tend to be more trends, execution times are quicker. So everything good takes place during the New York time zone. Then we get to the worst. When I say worst, no disrespect to the Japanese, but based on the Tokyo stock market, and they're on the other side of the world, they're ahead of me, for example. And so again, you can work from the Tokyo Stock Exchange, you can work from 9 o'clock in the morning till 5 in the afternoon Tokyo time and translate that into your own time zone. There's no point in me telling you what it is in my time zone because you'll all be different. But this tends to be the period of the market when, if you're going to walk away and not trade, this is the time when you want to be doing it, during the Tokyo stock market open and close period. During this time, the markets, and I've showed you on a couple of the charts in the lessons before, the markets tend to be choppy, less fluid. There's less money moving around, less certainty about what's going to happen. Any announcements in the news that come out from Tokyo, financial announcements, don't really have a major effect on the market. And so you're left in this choppy sort of meandering period. It is possible to trade during the during the Tokyo time zone, but you'll find that these would be, if you are going to trade very short-term moves, you might want to have tighter stops and smaller profit targets when you're trading during Tokyo. So not the most exciting part of the market, but like I say, if you really are a marketaholic, you can trade during Tokyo if you really want to. And then we come across to London, which is roughly my time zone, a little bit different by an hour or two, depending on daylight savings again. And the London is second best to New York. And so during the London session, you'll find that we're sort of halfway in between New York and Tokyo. There are some good moves, not as good as generally happens during New York. There are opportunities to trade, but again, not as good as New York, but better than Tokyo. So depending on where you live, if you can possibly trade in New York time zone, for some people, that'll be the middle of the night. For others, that'll be perfect because you live in that Eastern Standard Time area of the East Coast of somewhere in that time zone, whether it's in the South America region or the Northern America, Canada, North America. You might want to trade then. But if you have to trade, there's nothing wrong with trading during the night. I did that for a very long time. And I would trade at night. I lived in Australia for a long time, and I would trade at night, which, as long as you get a decent a decent amount of sleep, it's quite fun. You can sleep at other times. It also frees you up to do other things during the day. Perhaps you've got hobbies that you like to do. Perhaps you like to play golf. Perhaps you've got children at home or something like that you want to interact with, or just spend time with your friends or your husband or your wife or whatever. So that's what you can do. So depending on where you live, you can find out timeanddate.com. And like I said, in order of importance and opportunity, the trading periods are New York first, then London, then Tokyo. And they do overlap a little bit. So there are periods when one is not quite closed and the other one's opening, or vice versa. And you can check that out. It's quite useful actually just to make a little sketch on a piece of paper if you want to, and you can just draw blocks or bars where in your own time zone where you live, when one of these starts and ends, and you'll find a bit of overlap as well. But I think that's said that. News announcements. Really, I try to ignore news announcements. I try to trade, and this news. If you're interested in news announcements and you let them have too much of an effect on your trading approach and your analysis of the charts, you're moving more towards what they call fundamental trading instead of technical trading. What we do is technical trading. We look at the charts. The charts tell us what we need to know, and we take the trades based on that. When you look at news announcements, you're drifting slightly or somewhat into the area of fundamental trading, which looks at the fundamentals of things, what's going on in economics, what's going on in politics, and all that sort of thing. So, but having said that, so we don't want to pay too much attention to it. But having said that, there are 3 news announcements which are of interest and have a profound effect on the market. And you should just be aware of these. And I'm going to go through them very briefly, one by one. The NFP, it's an American number that comes out, non-farm payrolls. I think it's the last Thursday of the month. And depending on whether the job numbers have gone up or down, the dollar will go up or down accordingly, and sometimes very dramatically. So much so that sometimes we get market gapping, which we haven't talked about before, but you can end up in a situation where the market moves so quickly and so fast that there's no opportunity for you to get in and out of trades. There's no opportunity for you to set your stop losses. Sometimes the market will move past your stop loss without even having the opportunity or the time to pause and take you out of your trade. Particularly difficult time to trade. Before the NFP comes out, don't be in the market. Once the NFP has come out, after that, you can start trading again. And in fact, I've got trading systems that are based only on this one news announcement every month. And but we don't trade before the NFP. We wait for the market to settle down after the announcement, and then we can take decisions based on trading. I'm not going to cover that here in this. This is more of an advanced trading technique. But let me just say, don't be in the market. Don't have any open trades before the NFP number comes out, because it's going to burn you at some stage. Jobless claims, Thursday every week. We saw that in one of the last lessons, that when jobless claims come out, also related to jobs, of course. NFP is jobs. The US is a bit fanatical about jobs, I have to say, but they're very focused on jobs. So when jobs numbers come out, the market moves for sure. Jobless claims, if there are more jobs created, the market becomes more optimistic. If there are less jobs created, the market becomes less optimistic. Jobless claims is really how many people have gone to whatever the facility is in the US and registered as jobless. So jobless claims, Thursday every week. Often good opportunities to trade, not as volatile and dangerous as the NFP, so there's no problem with being in the market before the jobless claims come out. And we did exactly that on that last trade in one of those lessons. And then finally, interest rates. Interest rate announcements come out generally once a month, but most often interest rates don't change. But when they do change, I'll tell you the effect on the market. When the interest rates go up in any country, so let's take the US for example. If the interest rate, the lending rate goes up in the US, what happens is the dollar will tend to go up. If the interest rates go down, the dollar will tend to go down. The reason for that is because if you have some money in big corporations, trading firms, investment companies, even individuals, if you've got some money in euros and some money in dollars, and the interest rate in the US goes up, it makes more sense to have more money across in the US, where you get a better return in terms of interest on your money than you would prior to that. And so you'll often find that people will move their money from one currency to another to wherever they get the best interest rate. And that's what that's all about. So those are the three news announcements. Generally, don't trade during the NFP. Jobless claims, you can have open positions when those news announcements come out. It's not a major problem, but the market will move. And then interest rates, of course, will affect the markets as well. Most of the time they remain unchanged, but if they go up a basis point or half a basis point, you can be sure that that currency, whichever has had an increase in interest rates, that currency will go up. And then finally, the last little bit on this in this section is psychology. Now, we did a whole course, I I don't know, I suppose it must have been 8 years ago now, on trading psychology. And this is really important. We had a very thorough and detailed course on trading psychology. A lot of the problems that you'll experience as a trader are not technical problems. They're not because of lack of understanding of charts and markets and all the stuff that we've been through in this course. Sorry, I just slipped back into editing mode there. But the problems are basically because of wonky trading psychology. I might do another course on this at some stage. I'm not too sure right now, but let me just tell you, and you can take it from the horse's mouth, most of the problems that you'll encounter in your trading, and this is absolutely true, most of the problems will not be because of technical matters, understanding the mechanics of trading and all of that, but it will be because of your psychology. That's why I said earlier, going back up to the top of this list, monthly targets. It's very important, really important, to be able to walk away and take a break from the markets as often as you can, because these problems start to creep in. These ones down here. If you're in an unrelaxed state, you're going to make mistakes. If you have fear, you're going to make mistakes. And that fear could be one of two main things. The fear of losing a trade, losing money. So, in other words, when the market comes down towards your stop loss and you know that if it hits that stop loss, you're going to lose some money, that can create a lot of anxiety and fear. The other fear is fear of losing out on a winning trade. And this is probably even more powerful than fear of losing an open trade. But fear of losing out on a winning trade, really, really powerful. So, and that affects what we were talking about earlier as well, monthly targets. So if you get to your target halfway through the month or 2/3 of the way through the month, and then you stop trading and you have a look back in your charts, or you look at your charts during that period, you've told yourself you're not going to trade, or you have stopped trading, and you notice that there are some perfect setups, beautiful setups, classic opportunities to take trades which are almost no-brainers, and you've missed out on that. You haven't taken the opportunity because you weren't in the market. And that's called the fear of missing out, fear of missing out on a winning trade. It's a very important thing that can also induce tremendous stress and anxiety into your trading. You've got to guard against that. And then discipline. Well, discipline relates back to these earlier problems that we talked about. But when you start to experience stress, anxiety, you start to become unrelaxed, you experience fear of losing, fear of missing out, you experience greed. We didn't talk about it just now, but greed is very closely related. You think if I just hold on to a trade for a little bit longer, it'll probably give me some more profits, or I'm not going to stop trading for the month because there are opportunities out there that I'm going to miss out on. I think I could make 400 pips this month instead of 200. I really want, desire to get more out of the market. And you get into this sort of gambling mentality caused by greed. And the only answer to all of these things really is, first of all, take breaks from the market. But secondly, be disciplined and stick to not only your trading plans, technical plans that we've talked about throughout most of this course, but also stick to your psychological disciplines and try and avoid all of those things that are on the screen right there. If you can do that, if you can be disciplined, if you can avoid fear, greed, anxiety, stress, you're in a very elite group of traders, because it's really difficult, but it can be done. All right. If you want to learn more about trading psychology, I don't have a course on it at the moment, but you can go onto Google and just type in trading psychology, and you'll get some more insight from it. but there's no point in having all the insight unless you're willing and prepared and able to do something about it. And discipline is absolutely probably the most important of all the skills that you will have learned throughout this course. Anyway, that's it. We've come to the end. So good luck. Good luck with your trading. And as I said earlier, I really hope and I trust that many of you who have gone through this course will become successful, experienced, talented, and happy currency traders, and that you'll be able to use these tools in any way that you wish. Like I said, you might want to make this a full-time career. You might want to just do it on the side. You might be retired, all of those various things. Or you might just want to dabble in coffee shops. Whatever it is, I wish you all the best, and I'm excited about your future and the opportunity that you now have to move into a new phase of trading and working the way you want to. So I'll see you another time, I'm sure. I've got some other courses coming out a little bit later on this year, and hopefully I'll see you there. Take care.